Hello guys, so let me quickly show you guys how to go against the spike. I know it's really hard for anybody to go against the spike, okay, because you can be seeing $100 and before you know it, two spike comes and you know your profit might drop to back to $20 or something. Like sometimes you might even be in loss, in big loss, right? So a lot of people are afraid of going against the spike. Yeah, I equally feel somehow whenever I go against the spike, because I know I might be seeing good profit and before you know it, one spike will just come and the spike does not respect stop loss. Do you understand? That's why it's always very, very scary. But you don't have to be afraid. You don't have to be afraid of the boom and crash market, especially when going against the spike. Do you know why? Because it's just the same thing like when you are going when you're going the spike direction. Now, for example, this is B500 and I'm going against the spike, and I've given the signals to my VIP. I've given the signal to my VIP. Attention, TP, sell, and I gave the SL, reduce profits and all. All right, so you can see we are still running good profits right now, though we had a spike. That's why I'm telling you, if you understand how boom and crash market works, you don't have to be afraid. Okay, even when it goes against you, when it spikes and it looks like it's going against you, so far you've done your analysis. All you need to do is just allow it to play out. Do you understand? So I want to show you guys how to go against the spike without having to worry about anything. All right. So if you're new on our channel, watching this video or watching video on my channel for the first time, please smash the like button, subscribe to this channel, and drop some good comments. Also, don't forget to join the free Telegram channel because I'll be dropping some signals and some contents, some stuff to educate you, to help you know how to navigate through the market. Okay, so here, this is how you make money from the boom and crash market, or how to go against the spike. Now, some people feel when they say going against the spike, they feel it's something really difficult. It is somehow, but if you know how to analyze the market generally, be it step index, okay, this step index, the same way I will analyze step index is the same way I will analyze boom and crash market. So when I'm going against a spike or I'm in the spike direction, it's still the same thing. I'll get the same result. If I did not do the right analysis, I'll still lose money. If I did the right analysis, it does not matter if I'm going against the spike or in the direction of the spike. Do you understand? So the same way I will look at this asset here, look at this step index here, and tell you what's going to happen in future, like this. Move down to my daily time frame. I told you from this level, markets will be dropping. I didn't mean I was here when it was around this level. It will be dropping back to this point. So the same way I would do analysis like this on the step index market, it's the same way I would do the same analysis on boom and crash market. So if it's want to go against me, it's to go against me. If I still want to make, if it's okay, my analysis is right and I'm making money, I'm going to make money the same. So it does not mean if you're trading the boom and crash or you're trading any other assets. The main thing is if you know how to analyze the market and know what's going to happen next in the market, that's the main thing you need to put into consideration. So we are trading the B500. We just had another spike right there. B500. Now, this is how to go against the spike. First of all, you need to move to your higher time frame, like the 4 hours time frame or the daily time frame. Let's not go far. Let's say this is our daily time frame. The first thing you need to know is there are some, let's say, for example, you have a farm where you train, where you have cattle. You have cattle in your farm, okay? So, when you have cattle, you need to put a fence around the cattle so that you'll be able to control this cattle. If it is free, they have free movements. They can go and enter maybe somebody's farm or something and, spoil stuff and whatever or miss, right? So you need to put a fence, and your fence must be strong so that when this cattle is going closer to the fence, it will try breaking through the fence. And if it does not, if this fence is strong enough, it will reverse, the cattle will reverse back into the pen. But if the fence is not strong enough, the cattle will break. So now what you're doing when you open your chart, you need to go to a higher time frame. And the higher time frame will give you a stronger resistance or support, which is defense. So when you go to the higher time frame, what you need to know is how strong is this fence? How many times did this market try to break this fence, which is your support or resistance? In this kind of market, we're looking for a strong resistance because market is going to the upper direction of the of my chart, right? So we're looking for a strong resistance. You can see here, this market has been reversing over time. We had the market reversing here, 1 and 2 and maybe 3 here. So if you keep going like this very line, the red line you have here, the one up here, this one up here, you want to see how many times market tried to break this fence, how many times this cattle tried to break this fence. So we have a level here where market tried to break the fence, a level here where market tried to break the fence, another one here. We have like 4 to 5 places now, and another one here where market tried to break this fence. Okay, so this is a very simple way of trading. If you listen to this video and watch it to the very end, you'll be able to understand how to analyze the market already. So you can see market reversal here, again here. All right, so that alone tells you how many times market has been reversing around that zone on a higher time frame, like the 4 hours time frame or the daily time frame. So this makes it a very strong resistance. Okay, so when markets get to that point, it will take it a while before it breaks that point. It could pause or reverse from that level, but before it breaks that level, it will take it a while. So the next thing you'll be doing will be probably looking at the candlestick that printed. So you can see on this candlestick, we see a very massive rejection, a very long rejection from this level down to this point. So that's a sign that there is a rejection. We have more sellers at this point. So be it whether you are going against the spike or not, it does not count anymore because you've seen what you have to, like, what you need to be, like, things you need to put into consideration. So the same thing I will see on the step index, VIX, any other VIX assets, it's the same thing I'm seeing here. So whether it spikes or not, it will still respect my analysis because I've done the right analysis. The market's going downward and this is a downtrend. This is a downtrend because you can see this, the way I placed this trend line, that shows that market is going downward, right? So it's a downtrend. Market will keep going down till we hit our TP. So whether it spikes, if it spikes, it will still come down till we get to my destination because it's going down now. Okay, so I think that's very simple. That's how to find an entry on step index, be it whether you're going against spike or not. So far you've done your analysis, it will respect your analysis. It can only spike, but then if it's meant to go down, it will still go down till it hits your TP. All right. So now what was my confirmation? Why did I give this sell signal? I gave this sell signal because I saw the rejection on the higher time frame and even on the 30 minutes time frame. Sorry, rejection on the 1 hour time frame, the 30 minutes time frame. And I saw when 15 minutes closed bearish like this, and plus the rejection, long rejection from the key resistance zone, then that was the reason I opened this position, this sell position. Okay, I opened this sell position at that point and we are running good profits. So these are our targets here. I wanted to give TP 1 and 2, but because I'll be having my class very soon this evening, I just want to concentrate and teach my people. So that's why I decided to put my TP here so that it will hit on time and close before my class. When I start my class, right? I don't want the distraction, right? So you can see we're going to make profits from here to here. We're going to make so much money. And another thing you need to note, when you open a position, you need to take, okay, from my entry to my TP level, I'll be making $42. All right, you can see that from my entry to my TP level, $42. Then from my entry to my SL, I'll be losing like $16, right? We're losing like $16. So you can see now I'm about to make $40-something to lose $16. So if this market goes against me, I'll be losing $16. But if I hit my TP, I'm making $40. So which means if I win this trade and lose another trade, I might still be in profit or with no profits and no loss. So you need to know your risk management as well when you are trading the financial market in general, be it boom and crash, forex, indices, like everything. you need to understand your risk management too. Okay, so and now the risk management I'm using, my account is very big, but I reduced the risk so far so that even if it goes against me, it will not affect me, because when you have the psychological effect, it will affect me somehow, but then it will not, I won't really feel it because it didn't take much from my account. Do you understand? But if I risk more, it will affect me psychologically. I will want to fight back the market to get my money back. That way I'll end up losing everything. All right. So that's how to trade the boom and crash market. So whether you're going against the spike or not, it will give you what you want if you do the right analysis. So I'll advise you guys to join the academy and learn more how to trade the financial market. It's that simple. Okay. And join our VIP to make money for yourself. Accounts management is open. If you have up to $200, you just bring, let us make money together, right? Okay, so I decided to make this video to show you guys how we closed the trade that we didn't close with loss or something, that we hit them at TP. Now we are about to hit our TP. You can see right very close. Now why? Let me tell you guys why I placed my TP here when I have my own support here, which I'm supposed to place my TP here, right? But I decided to put my TP up here. That's because if you look to the left, you see that this is a strong zone. This level is a strong zone. Okay, this is a strong zone. This is a demand zone, right? That level is a demand zone. So when markets get to this area, once market get to this area like this, it will start reacting. Why? Because you can see we have some structures here. Market might want to react around that level. So you wouldn't want to put your TP just at this point, because market might want to play around in this level before spiking, going up. So we just hit our TP right there. So like I said, this is a demand zone, and this is a zone. It's an area on our chart where markets can react whenever it gets to around this zone. So if you see what just happened now, we just had a spike because it has touched this zone, very close to this zone. That's why I placed my TP right there. So knowing where your TP is very, very important as well. It's very important as well. This market you're seeing now might keep on spiking back to this point again. All right. So this is a very strong zone. Whenever a market gets to this area, it will keep spiking unnecessarily. So that's why I had to put my TP above that zone, so that whenever it smashed my TP, the spike will start happening. All right. So you can see, guys, the same way you analyze other assets is the same way you analyze boom and crash. There's nothing different from boom and crash. Boom and crash looks different on a very lower time frame, like the 1 minute or 5 minutes time frame. But other time frames, you have the same candlesticks, the same everything. Right? So you don't need to be afraid of boom and crash. Whether you're catching spikes or you're going against a spike, just know what you're doing. Just know what you're doing. Trust me, you'll make good profits and stay consistently. All right. So guys, that is it. Join the academy. We're having class today by 8 p.m. Okay, we have class by 8 p.m. Join the academy, bring our accounts for accounts management. We make money. All right, just all you need to do is just send your details, MT5 details, and I'll do the trading while you make the withdrawals. Please don't send your money to anybody, and don't send money. I will never chat you first for you to send money to me. Please, I don't do anything like investments. Nothing like you give me $1,000, then I'll triple it in 2 days. Or I don't do that. Don't send money to me. Don't send money to anybody unless you're paying for my services like academy or signals. Don't send money for me to trade for you. Send money to my account for me to start doing trading. Only fund your account and send your details to me. So I will never ask you first to send your details to me, or I will never chat you first to do any business with me. Okay, so please be careful. Don't allow people out there to scam you. Okay, thank you. If you want to get to me, just check the description of this video. You see my contacts, my WhatsApp and my Telegram, my contacts. Just chat me directly and let's make money together. Thank you. Bye-bye.